Good morning and welcome back to Almus Market Mornings. There's quite a bit to unpack today with developments across the board. Eurozone inflation has eased to 2%, the lowest since we've seen in August, bringing it back to the ECB's target level and reinforcing expectations that the rates may stay on hold. From the US, economic signals were mixed, with the ISM services data alongside JOLTS opening falling to the lowest level in a year. And when it comes to the markets, heavy profit taking was seen in metals last night, with MCX silver hitting its lower circuit. And once again, the RBI stepped in with another round of intervention for the USDINR. Good morning, Jayaram sir. Why do I get this sense that the RBI is still not letting the dollar rupee sustain above its 90 level?
Good morning, Ishan. Yeah, I think RBI is still managing undue volatility. In the last few days, we had seen some buildup of long positions, this time probably in the local market. That is why they were intervening yesterday. So if you look at it, their intervention yesterday was not very aggressive. They intervened during market hours, provided liquidity to the market, and uh, actually, after their intervention, it was the interbank which was seen liquidating their long positions. At the same time, it was not intended to push the rate too lower or something, which is about 20-25 paisa lower. And of course, importers were ready to latch onto such a dip. And though the rate did not jump after that above 90 once again, market being hesitant in view of apprehension that they might come back again. WP, I think currently factors are not changing, fundamental factors, except that we continue to watch the central bank's actions. And no doubt, yesterday after the market hours, we had the India's estimate of GDP for a full year FY26 was uh, announced by the government at 7.4%, well above 6.5% of the last year, and this is also above the RBI's projection of 7.3%. Consumption has accelerated from 2.3% to 5.2%. That is a big takeaway. Now, these advanced estimates are very early projections created by the Statistics Ministry, and it is going to form the basis of projections that the Finance Minister will make when she presents the budget on February 1. And so that's the main important. We could well have many revisions going forward, but this is the initial estimate. But going by that, I think it shows that Indian economy is performing well, and it's quite resilient in the face of various challenges that we have faced of late. Of course, none of this is actually changing the pattern of the market. That the stocks continue to be subdued relative to other markets, and FI flows continue to be negative also. But as I said, yesterday was a very busy day for the global markets because we had a host of data from Europe as well as from the US. Yeah, of course, as you said, the ECB is very unlikely to touch their rates for the near term, though inflation has fallen to their target. In fact, in Germany and France also, it had fallen. In Germany, inflation was below the 2% target of ECB. But I think unless we see a sustained move below 2%, we don't see a rate change. And I think not much implication for the euro either from this data. Employment situation in the US confirms to be on the weaker side. ADP employment came at plus 41,000. This is well below the average of private payroll data that we've seen over the last few years. And last month's number stayed at a negative 29,000. Job openings were much lower at 7.14 million. Market was expecting 7.6 million. Again, confirming the slowdown in hiring. And though the quits rate was higher, overall quits rate has been falling. The quits rate actually indicates the confidence of the employees so to quit and seek newer jobs. So the newer jobs opportunities have been much less. So establishes that the employment situation is still quite dour. We will have more indications today, weekly jobless claims and the challenger job cuts. Of course, tomorrow we'll have the all important non-farm payroll and unemployment data. These are first reliable government data that we will be having to assess the state of the economy. ISM survey continues to show that service sector is doing extremely well. In fact, expanding much more in the month of December, uh, though the manufacturing side has continued to show contraction. So that actually supported the bond market also overall, and the stocks, of course, had seen some profit taking in the Dow, which had had a good rally in the last few days. So well, it's still too early to call a trend in the markets. It's all multiple views playing out. Therefore, we should not take any have any takeaway from these moves, and market will assess. I think the real directional move can come only after a couple of weeks after market observes the various developments, and the developments have been many, particularly in the geopolitics, and markets are keeping a very eye on the geopolitical developments. The regions in focus being Cuba, Greenland, Iran, and of course the Japan and China tensions as well. And US added its own share to the tension, saying they ordered Venezuela to end all relations with China and Russia. The situation is not comforting, as investors are apprehensive of any sort of escalation and or reactions from the other major powers as well. So that's the reason why you see even the dollar not moving much. I think it is a wait and see situation. In the meantime, we had the gold and silver particularly see a good amount of profit taking, particularly the silver, which fell as much as 7% intraday. I mean, the entire up move that was seen in the Asian time was reversed later in the day. Gold, of course, fell about 1%. Recent gold moves have been quite subdued relative to other metals as well. Nothing to change the trend in these precious metals, but it was just a day of profit taking, that ensued. Not saying that they have seen a top or anything. That is, we need to see some more price action before we can come to that conclusion. So a busy day, a busy week ahead still, with lots of data to come, and that sets the tone for rest of the month, as well as the developments on the geopolitics that we should be really more worried about than the economic data, which has been so far ignored. Thank you.
Thank you, Jayaram sir. And just to summarize, we saw a small intervention in the market yesterday by the RBI, as the RBI provided liquidity and importers took advantage of this dip. The Indian economy looks to be performing well and resilient, as we saw the estimates for a full year GDP growth increase to 7.4% in 2026 from 6.5 in 2025. And it'll be interesting to see how these factors play out for the upcoming budget on the February 1st. The JOLTS data came out to be lower in the US than expectations, and confirming that the employment market is slowing down in the US, and linking this to the important NFP data that we will be receiving tomorrow. So it'll be interesting to keep an eye out for that, and seeing whether the Fed will take a decision for a rate cut based on this. And 2026 starts off with a very concerning note when it comes to geopolitics. And the investors also stay on edge with regards to this, as there are many uncertainties with respect to the US economy, Cuba, Venezuela, China, Russia, etc. And there's no change in the trend for precious metals, as it was just a normal day for profit taking in the metals. That's all we have today for you guys. Thank you all for listening, and we'll catch up tomorrow for the fresh round of updates.